Hello, everybody. This is Bob Anderson, and I'm going to do another version trade video that I want to show you guys. Most of it's going to relate to oil. I've had a lot of people interested in oil. I've had a lot of people messaging me about using the continuation trade on oil. And so I'm gonna talk about that. I'm gonna show you some adaptations of how to trade both either the oil or ES, as long as you're staying in your time frames of when these things work. Again, you got to have movement. You can't be in consolidation for any trade that I ever talk to you about in working. Okay, it doesn't matter if it's the overnight open. Doesn't matter if it's a 5-minute gold line. Doesn't matter if it's the continuation trade. You need to have price outside of consolidation. Okay, so so what I'm going to do is I'm going to talk about how I'm going to adjust my charts after I show you my trades that I took today. I took 4 trades today, 3 winners, 1 loser. The loser I lost like $70 in oil. I lost $70 in oil, made $100 on the second one. I had 2 ES trades, one for 5 points, one for like 2.5 points. You guys are gonna laugh at me on my ES trade because I gave up on it and the damn thing just kept right on going. But you guys will laugh at me. I mean, I make mistakes too, folks. I really do. I mean, I really do. So anyways, but I think my eval accounts went up about $400 today, which, by the way, I started them on Monday. They're already at 26,350, 26,350. They're $25,000 accounts. I'm $150 from passing. I'm only 3 days into them. Now, how did I do that? I'm going to tell you. Monday and Tuesday, oil. Today I played the ES because today is oil inventory day. So I inventory every Wednesday. Oil does an inventory report, which causes oil to go flat from when it even opens all the way to about 10:30. Then it'll act, crazy. But I had to. I mean, I got to work. I got other stuff to do. So, anyways, the other thing I want to talk about is, by the way, the affiliate code that we set up for this channel with Apex. We had 440 evals. We had 301 eval accounts signups on Monday alone, the last day of the sale. That's just insane. That's insane. When I posted this thing out there, I was like, well, maybe 50 accounts will sign up. So what I'm going to do is I'm going to show how all 440 can become PA funded accounts when I show you certain things on these oil charts today and even on the ES. Okay, because yeah. So one of the things I want to talk about is on the 1-minute chart. If you simulate in the 5-minute chart bigger timeline lines that I've talked about many times on this channel. So one would be on your, remember, this is a 1-minute chart, okay? 1-minute chart. You've simulated in the 5-minute SMA, the red line, okay, that is the actual red line on your 1 minute. It has to have a setting of 105, okay? And then your 5-minute EMA, which is your gold line on the 5-minute. To simulate it onto the 1-minute chart, it has a setting of 45. So this is your gold line, this is your red line from your bigger time frame charts. Okay? There's a reason I'm going to have you, I'm talking about simulating them onto your 1-minute chart. Okay? And you'll see why here in a minute, versus just having them all by themselves. Remember, you're only trading in the direction of this one anyways. That's the trade direction. That's the trade direction SMA. Remember that. Big time, you're below it, you're only taking shorts. Big time, you're above it, you're only taking longs. Okay, so that's that one. Just to get everybody familiarized with which one I'm talking about. So what you have happen when you break out of consolidation, say at the open with oil or the ES or whatever, you have your breakdown, and then you get your price has a tendency to run away, and that's when you get your continuation trades on your 1 minute gold line. And then after a while, it gives up the ghost, and the gold line no longer holds, and it comes back to this gold line. Okay, especially this is so rhythmic in oil. When I show you guys today, you'll be like, holy crap. Yeah. So anyways, then it comes down and it'll go to oil again. Let's just say, or to that gold line again, then it come down. And then a lot of times on the third time, it gives up the ghost. Remember I talked about 1, 2, 3? Give up the ghost. Well, when it gives up the ghost, it's not like it's reversing now. Okay, as long as there's no news events, no stupidity going on in the market. Remember, we need rhythmic markets for our trades. What'll happen next is it'll go back to that 5 minute SMA, which is your red line, your directional red line, and then it'll do the same thing. Okay? Now this happens in the ES and this happens in oil every day. By the way, that's part of the reason why I use these two instruments to trade with, because the reality of it is their movements are similar. Just oil has a tendency to move more in a straight line. And I'm going to show you what move in a straight line means and how to trade it. Okay? So anyways, so what today's video on trading is going to focus on is these two lines. Okay? But I also know some people want to see what trades I took today, so I'm going to show you those. By the way, two of today's trades were these. Okay? So, let's do it. So, this is my ES. I'm going to spend just a little bit of time on the ES. Not a lot. Okay? Not a lot. What I want to show you is how price broke up across your 5 minute red line. So price broke up, and here's, by the way, here's continuation trade. Wham! On the 1 minute. Wham! Of course, it's 8:30 in the morning. I think there was news then. I don't remember. And then bing, bing, bing. Now, by the way, this is your 5 minute EMA. So this is your 5 minute EMA set at 45. Here it is, 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 here it is. And bam, there's your first test of it over here. Okay? I took the break of that long right there. See, the top of it was 32. See, the top of it is 32. Took the break, the first touch of the 5 minute gold line, the break of the 1 minute candle that did not go off, that didn't break down through. That's very important. I'll show you examples of that in a minute. And then bam, there's my entry. And like an idiot, I got out early. I am an idiot, just so you know, because look what happened. And why I got out early is after I got in it, I started thinking, oh no, we're getting close to the open. We really weren't, because I got in at 9:13. I got out at 9:14. Now, let me do this just for simplicity purposes. Let me remove this. Let me remove this. And let me remove this. And let me go like this. Now, does that look a lot better now? Does that look a lot better now? Does everybody see why I took that trade now? If you get rid of the 1 minute moving averages, okay, and you wait for the step back, step back, step back, step back, and then the break, you're expecting this gold line, this 5 minute gold line, you're expecting that to hold minimum the first time it touches. Minimum. So, bam, there's your long. And like an idiot, I got out early. That's my fault. That's my fault. That should have easily been a 5-pointer. Instead, I took 2.5 or whatever it was, because all of a sudden I started looking at the open time frame. I mean, it's just, I'm sorry. I'm only human. I'm only human. But you see this? Now, the lines I took off were just the 1 minute lines. And that's what we're going to talk about here on oil in a second. All right. Now we get to the open. So you just ignore everything. Just ignore everything. Just ignore everything. Wait until you get back to some semblance. We had news at 10. Or no, we didn't have news at 10. I don't remember what we had. Where's my second trade? Oh, there it is. So we had a breakdown, we had a break up, and we had a breakdown, and then I took the break of this candle right here. Bam, there's my 5 points. Here's one. This is the overnight open. 1, 2, 3. Remember the comment? 1, 2. They always give up the ghost on the third one. I took the break of this candle right here, which is the giving up the ghost. The third one. 1, 2, 3. Bam, 5 points. I mean, that literally was not even 10 seconds. Anyways, so let's go and look at oil, because that's what I want to focus on. Okay? And we're going to do the same thing here on oil that I just did on the ES, except we're going to do it on this white chart. I don't know if that's any better. But anyways, remember I told you oil has an inventory report. So like oil got real consolidating, from the open all the way through. So I wasn't even worried. I wasn't even thinking of oil. I wasn't even trying to take an oil trade. Then the inventory report comes out, which probably, because oil went down, probably means they have more inventory supply than they counted on. That would, supply and demand type thing. So then you had your breakdown, and you had your higher low, higher low, higher low, bam, 20 ticks. This one was too deep. This one, again, up, bam, 20 ticks. I mean, oil just has, this one never touched. This one, too deep. But let's get over here now to what I'm really here to talk about. This continuation trade worked. This continuation trade worked. By the way, let me show you something about oil. Okay, I talk about oil moves in straight lines. This is very important. Shoot, I got to take notes when I'm doing these videos. So when you enter this trade right here, let's just say, right here, at 73.50, okay? When this candle breaks down, you move your stop right there to the top of that candle, which is 73.52. When this one goes down, you can go all the way to here, 73.18. When this one goes down, you can go all the way down to here, which is 73.12. When this one closes right here, you can go all the way down to here, 73.09. If you follow this trade down from here to here, you made 40 ticks. If you just followed the back of the candles, follow the back of the candles, follow the back of the candles. That's what's so nice about oil. When I say it moves in straight lines, what I mean is this is the top of this candle, 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 this is the top of this candle. It runs in a straight line. Same thing here. When this thing broke down, it ran in a straight line. When this thing broke down right here, it ran in a straight line. When it went back up, it didn't quite run in a straight line, but it's going counter trend. So here, now, so let's go over here and do this. Wait, where am I? Let me get into my, not chart trader, my indicators. Let me get this out. Let me remove this. Remove this and remove my EMA. There. All right. So all we got left is the 5-minute stuff. See how this chart cleans up? Now you miss these trades if you get rid of those lines, but I'm trying to clean the chart up. So you break down. This is your first touch on your 5-minute gold line, okay? If you take the break of that candle right here, okay, which is 73.04, okay? 73.04. Does everybody see that? I hope you see that. 73.04 over here. All right, this is important. When that thing breaks down, which by the way, that ran down, Jesus, hold on here. Did it run down that much? So you're in at 73.04, which is what I've said about 12 times. Which I've said about 12 times. It ran all the way down to 72.87. So let's see here. That's about 15 ticks. Okay, but at that point, your stop should be above this candle right here. So when you took it at 73.04, you got knocked out at 73.09 if you were still in it when it ran up. Okay, so you lost 4 ticks, 5 ticks. It rolls down and does the same thing again. Bam, now you're in at 72.95. As soon as this candle right here closes, you stop right above it. As soon as this candle right here closes, stop right above it. As soon as this candle right here, stop right above it. As soon as this candle closes right here, stop right above it. As soon as this candle closes right here, stop right above it. 72.79 is where you get knocked out if you follow the entry. And you got short at 73.95. So, I don't know, what is that, 20 ticks or something like that? Then, here's your third time. It goes up. And here's your first time to your 5-minute red line. Bam, bam. 72.87. Don't worry about this red line. Don't worry about this gold line anymore. Now, because now they're playing this one. 72.87. Bam. You do your stop. You do your stop. Bam. You made your money. So what I was trying to do is show you that these bigger time frames work also. What I'm going to do is I'm going to go back now. Because look at it here. Look at it here. Look at it here. By the way, that's the one I took. I took this one right here. That's the $100 trade I made today. Right there. I took it off this 5-minute gold line break of the candles. Bam, boom. That's the trade I actually did take. I'm going to yesterday now. Let's go to yesterday. Let's go to yesterday. Let's go to yesterday. Let's go to yesterday. Jesus. It's hard because oil has a lot of stuff going on. All right. So here's oil yesterday. All right. So after 9:45, it came down, went to the gold line. Boom. There's your long. There's your long at 76.49. And it ran all the way up to 76.82, 83, which that's over 30 ticks. Then it blew right through. Came up, blew right through. Notice there wasn't a long off this red line. There was no entry. Never gave you a valid entry. So you didn't get beat up there. And then boom, boom, there's your entry right there, 75.49 off this gold line to the downside. And if you follow the candles, you go all the way to 75.22. 75.49, 75.22 is your out if you just follow the top of the candles. That's 49.22. It's 27. It's $270 a contract. And then you get into the afternoon. The funny thing about yesterday, just as I'm watching this, it didn't even get to this red line until 2:30 in the afternoon, or 2 o'clock in the afternoon. But even at 1 o'clock in the afternoon, the first time it got here, your break is 74.01. I ran all the way down to 73.76. So 25 ticks. And then it did it again. And then it did it again. And then it finally gave up the ghost. So what I wanted to do in this video was to try to show you guys that you can do the continuation trade even off of the longer term lines, as long as price stays on the right side, meaning your entry stays on the right side of whatever one you're doing. The right side, like you got to be entering on the south side of this, if that's where your entry is going to be. You got to be entering on the south side of this, if that's where your entry is going to be. If price moves up above there and the candle's up there above it, you don't want to be doing that. Okay. I think that's about it. I hope everybody does well on their evaluations. Keep your stops tight. I'm going to be tightening mine up and keeping myself above the pivot candles, the entry candles, and following and doing that stuff, because it's just, we're getting closer and closer to the holidays. Things are going to get a little bit tougher. So and remember this. Remember what I told you guys before. If you do not pass your eval, don't freak out. Just wait until, January 4th or whatever, and have it reset. It's a better time to be trading anyways. But use the time and the data and whatnot to sim trade and get yourself straight. All right. I'll talk to you later.